how, so what are financial ratios, and what has to be the criteria while selecting these financial ratios for investment. So we are not dealing with any trading here till now. Just we are our perspective is to look at and to keep this, take this stock and keep it for some years, long term investment. In that perspective we are looking at. So for that, so what I told, we have to look at some parameters. One is market capitalization. So market capitalization we already know. So one is we have categorized the market into market capitalization into four categories: micro cap, then small cap, medium cap, then large cap. So most of the investment has to be in large cap. I have already told you, I'm just recapitulating. So 65% of your investment portfolio should be in a large cap companies or a blue chip companies, just like Reliance, TCS, Wipro, something. So this that is market capitalization of 40,000 crore and above. So you should be in a, that is very important factor. Market capitalization is very important factor in assessing in choosing a stock for long term investment. So now, so that is one thing. So we have also discussed the primary as well as the secondary market. Now today we will look into some terminologies related to some fundamental analysis. So what are those terminologies that is related to fundamental analysis? So here what I'm going to do is, so you just look into the formula. So just it's up to you. So here one of the terminology, what we call it as book, what is that? Market capitalization. I have already told you the formula for market capitalization is number of shares issued by the company into current share price. So number of shares issued by the company is always constant. They cannot issue any type n number of shares, as much number of shares to the public or to any person, either in the primary market or in the secondary market. So that is going to be decided by SEBI. Okay, so as per the norms, so the number of shares issued by the company is constant. So that I call it as a Y, and current share price, the current value of that particular share price into number of shares issued by the companies, that gives you the market capitalization. So market capitalization, for example, market capitalization of Reliance. So how much is the, you just type Reliance in Google, so you'll see the market cap. So biggest company in India, so Reliance Industries. So you have the market capitalization. You can just go it and check it. So you can check the stock price or you can check the market capitalization. Either you go to Yahoo Finance or Money Control. Just it is better if you download Money Control app and keep it with you. That will be better. So market capitalization you are going to get, and you are also going to get the stock price. The Reliance right now, the stock price is around how much? What is the stock price of Reliance now? How much it is traded? Maybe around some 3,000, 2,000 something. I don't know the exact value. Maybe in and around that, right? So the market capitalization will be highest among any Indian company. And Mukesh Ambani is holding around 49% of the shares. So that is called as the promoter holding. So 2,358 rupees the stock, the share price, current share price of Reliance is 2,000 for 353. So this you will get it. So the current share price of Reliance is 2,000 something, around 2,368 at present. It is traded at 2,368. Similarly, market cap, if you see in the just if you go there in Money Control app, and if you just see, just type Money Control. So moneycontrol.com in the Google. Just click Reliance. So here you can search Reliance. Reliance Industries. So you have two. One is Reliance Group, and another one is Reliance Industries. Reliance Group already gone, headed by Anil Ambani. So they have 2,353 rupees. Current today it has jumped around 118 rupees. 5% jump today. So 2,300, and that is the share price of the Reliance Industries. And if you come down here, so if you come down, that is it, you have the chart. So you have all the details here: opening, volume, VWAP, weighted volume. So many things. See, market cap. Here you have market cap. You are able to see my screen now. So what is the market cap? Unit 15 lakh 92,331. So market capitalization of Reliance. So 15 lakh 92,300. So 15 lakh 92,300 is the market cap. 15 lakh 92,300. So market cap is 15 somewhere in and around 15 lakh 92,331 something. So this value X is known. So current share price is known. So you just the unknown is Y. You can calculate. So if you divide 15 lakh 92,331 divided by 2,300, you will get some value. So only that much number of shares can be issued by the company as per the SEBI rules, not more than that. So that is, anyhow, that is for our just what is that, our understanding, right? So similarly, okay, we'll discuss about the IPO later. Today our topic is to discuss about the financial ratio. So before understand, so market capitalization, so the total out of 15 lakh 92,331, so 49% of this, so 49% of market cap, 49% of X. So market cap written it as X. So 49% of 15 lakh 92,000, around somewhere around 7.4, 7.5 lakh. So that much amount of money Mukesh Ambani is holding. So that is called as a promoter shareholding. So promoter shareholding is present from the birth of the company. So promoter is nothing but is there when the company is born. Mukesh Ambani was not there, his father was there. So from his father, grandfather, the same company is running. They are holding the highest promoter hold highest number of shares. So this is nothing but, so any company which is a good company will be having a good market capitalization above 40,000. That is a large cap. Similarly, promoter shareholdings will be high. Promoter shareholdings will be high, near to 50, above 50, 60. If promoter shareholdings are high, in the sense they believe their company and they are working very hard from so many years to grow their company. And obviously it's a good sign, it's a positive sign. If the promoter shareholding is continuously decreasing, for example this year Reliance now 49%, after 5 years it will become 39%, after 5 years 29, means promoter he himself is not confident about his company. So if he himself is not confident, why we have to invest then? So that is the reason. So market capitalization of the promoters has to grow, or it has to remain stable. If the company has to be a good company, and if you are looking at investing in such in particular company, you should look at this both promoter shareholding as well as market capitalization. But need not promoter shareholding. For example, Infosys, if you take, promoter shareholding is only 15 to 20%, but still it is a very good company, because the ethics, the work culture, the values, and that is different. That ecosystem is different. The IT companies can run like that, but core business, core industries, so that is not going to work like that. So promoter shareholding, Tata Group, so they are into n number of group. So they are into coffee, from coffee to cements, mining, everywhere they are there. Even to airlines, up to the airlines, Air India also they purchased. So their shareholding should be very strong. So then only we can purchase. If their shareholdings are dropping, you have to think. So that is one thing. Then we have another terminology called as book value. What do you mean by book value? So book value is nothing but total assets of the company, total assets divided by number of shares issued. So number of shares issued, you know how to calculate number of shares issued by the company. You already know how to calculate that, you will be knowing. So total assets. So total means whatever the company is having. So the total assets, if I cut the total property of the company into pieces and I divide by the number of shares issued, so the book value you are going to get. For example, you see, I will stop here and look at the, let us go to money control. So here in the money control app, so you have a book value per share. See, look at this. I told you book value is 1240. So book value is 1240 for Reliance. So if today the Reliance Industries, the total industry is going to collapse, you are going to cut the assets of all the Reliance group and you are going to distribute, then per share, everybody will get, whoever has invested in Reliance, minimum he will get 1240 rupees. So book value of a company should be high. For example, you have software companies, you have Wipro, you have TCS, you have Infosys, right? So if you type TCS, or Tata Consultancy Service, so see the book value of TCS. So even though the share price is 3000, look at this, share price is 3632, but if you see the book value, I'm coming down, book value is only, look at this, what is this, book value is only 235 rupees. Book value for Reliance is 1200 rupees. So if the TCS is going to collapse, you are going to cut this the assets of, means assets, it's a software company, it is not having more assets. Reliance Industries is a conglomerate, so it's having a number of business. Oil business is there, shipyards are there, energy business is there, then telecom business is there, and then retail business is there. So everywhere they are there. So their assets are more, but here if you see the TCS 235. So book value so is very less as compared to Reliance. Okay, sir, you may say, sir, Reliance is only software company. You compare with a software company, sir. So I'll look into another software company. So 235 for TCS, and for Wipro, let us say Wipro, Bangalore-based company Wipro. So we have here. So for Wipro, yeah, see the book value is 99 rupees. Book value is 99 rupees. Again, book value is lesser because TCS is a bigger company, more offices, more clients, more employees, and more infrastructure will be there. So obviously, so we have to look into the book value also. Obviously, book value should be higher. If you want to come, if you want to invest in a company, for example, IT industry, IT companies, you will choose around 4 to 5 some parameters. So you will see the book value, you will see the market capitalization, you will see the promoter shareholding, right? And you will see the price. So like that we have to see. So the book value is 99. So I'm getting the book value is 99. So what is book value? Book value is the total assets divided by number of shares issued. So total assets. So Reliance is having a highest number of assets. Its book value is 1200. TCS around 200 something, 240 something. Wipro, we are getting around 99.8, around 100 rupees book value of TCS. Sorry, Wipro. Book value of Wipro, 100 rupees. Similarly, so like this, we are going to assess the different companies, and we are going to analyze the book value, market capitalization, promoter shareholding, P by B ratio. What is P by B ratio? I will tell you now. See, here also for Infosys, book value is 181 rupees. So I'm going to invest. So book value here it is. So if you have invested in Infosys, so minimum 181 rupees is guaranteed. Okay, book that is what you are booking, minimum of 181 rupees. So minimum 181 rupees is guaranteed. Out of how much? Out of 1813 rupees. So only 181 rupees is guaranteed. Infosys collapse. Even Infosys goes bankrupt. So minimum you are booking around 181 rupees. So now we have one more terminology called as uh, P by B ratio. What is that? P by B ratio. So P by B ratio is nothing but, so if you look at this, P by B. Already what is P? Share price. Share price means share price will be it will be daily traded. Share price divided book value, already know. Share price by book value. So what is the 2,300 rupees TCS trading at around 2,300. So 2,300 divided by the book value. Book value of TCS is around 245. So if the P that is what we call it as P by B. B means book value. P means share price. P means share price. For example, if you ask a very good investor, maybe some Rakesh Jhunjhunwala or someone like Buffett, so they will look into, so they will invest in the companies whose they will look into the P by B ratio. If the P by B ratio is less than 5, so there is one criteria you can choose. Yes, you can think of investing in such companies. Then it's a good company. If P by B ratio is less than 5, then it is considered as good company. For example, book value. If book value is higher, what happens? Say if the book value is higher, because P by B means share price by book value. So book value is higher. Reliance book value is higher. In the denominator, it will come and sit. 1,200 rupees book value for Reliance. It will come in the denominator. Obviously, if the denominator is high, what will happen? The P by B ratio will be lesser. So that is why if the book value is higher, P by B ratio is going to be greater. So better the book value, better the company. Lower the P by B ratio, better the company. So book value should be high and share price to the book value should be low. That how much it should be low? Even if it should be less than 5 rupees. The ratio should be less than 5. P by B value should be less than 5. Then the company is a good company. Share price by book value should be less than 5. So for example, share price is 100. Let us assume share price, the share price of the company is 100 and the book value is 20. 100 by 20 is how much? So 5. So that is the meaning. So share price is 100 and the book value is 20. So the P by ratio will become 5. So if this condition is satisfied, so then book value, okay, P by ratio is less than 5. Yes, of course, it's a good company. If the P by ratio, for example, share price, you have very good, for example, so there are some companies which are having share price 3,000, 4,000. SpiceJet, it recently got closed out. Its share price was around 3,000. 3,000. Its share price was around 3,000 when it got closed. So its book value was just 1 rupees. So 3,000 by 1, how much? 3,000 by 1 is 3,000. What is P by B ratio? P by B ratio is, what is that? 3,000. It's a very, very bad company. You should not invest in such companies. So P by B ratio means book value should be very high and the P by B ratio should be very low, preferably lower than 5. So in such case, only we have to. So this ratio is called as P, but this is a financial ratio. This is one type of, this is a financial ratio. This is a book value. Similarly, we have one more terminology called as EPS. So earning per share, earning per share. So what do you mean by earning per share? So we have this EPS. So EPS is nothing but, you have the formula, profit after tax divided by number of shares issued. Profit after tax means whatever after giving it to government or everything. So then whatever you are going, so take home salary, nothing but profit after tax. So whatever you are getting after deducting everything, after running the business, what you are taking to your home, so profit after tax divided by number of shares issued. So that is nothing but earning per share. So earning per share. So cut profits. So if I cut the profits into pieces, how I can distribute to each shareholder. So earning per share means how the profits can be distributed to each shareholder. So for example, uh, so each shareholder, for example, EPS. For example, let us assume some company is having a EPS of 100 rupees. So I will show you in money control app there. So assume that EPS is equal to 100 rupees. Means what does this mean? After cutting all the taxes, 100 rupees can be distributed to each shareholder. 100 rupees can be distributed to each shareholder. What is that 100 rupees? How it is distributed? Means that 100 rupees is going to be distributed from whatever the profit the company has got. But the company is not going to give you 100 rupees. They will give you in the form of dividends. So what they are going to give? They are going to give you in the form of dividends, not in the form of EPS. They are going to give you in the form of dividend. So EPS is 100 rupees. Dividends is going to be lesser than, it has to be lesser than 100 rupees. So they will not give 100 everything. If they are giving everything to you, so whatever the profit they got, if they give it to you, what they will do? Will they can they run the business? No, it's not possible. So part of EPS, part of earning per share is distributed to the shareholders. Shareholders means you have invested the company, you have bought the shares of the company, and you are holding from 3 months, 2 months, 1 month, year, 10 year. So they will give you the dividends. So each year they are going to give you. Some companies will give yearly, quarterly, half yearly. They are going to give you. They are going to announce when they are going to give you the dividends. So some part, that is going to be decided by the board meetings of the company. How much dividends has to be given to a shareholders. So that is why you know na this there was a clash in the Infosys between this board members Nilankani, Narayan Murthy, Chris Gopal, and Vishal Sikka. These are they are the promoter shareholders. This one Narayan Murthy and Nilankani are the promoter shareholders. They are demanding more dividends. Vishal Sikka told, no, no, no. If everything, if I give it to you, how to run the company? So many things are, so I cannot give that much. So some clashes happened. These people removed Vishal Sikka from the Infosys board. So like this. So dividends means a part of earning per share is distributed to the shareholder. That is called as dividends. So part of EPS given to shareholder. So that is the dividend. So very good companies, they don't give you dividends. They will give very, very small part of very small dividends. They are just 1 or 2% they are going to give. That's all. So companies who are giving huge dividends. So for example, out of 100 rupees, 80 rupees you give it to your shareholders. You keep only 20 rupees. So what you are going to run the business? How you are going to run? How you are going to establish and how you are going to grow? How you are going to stick on in the market? Not possible. So obviously, dividends has to be lower. So companies like ITC, they are just giving the dividends. ITC is not that much bad, but it is reached a saturation stage where there is not much the company can grow. So they are giving more just to attract the customers, just to make the customers to invest in their stocks. they will announce before when they are going to give the dividends. So, and people blindly go and buy the shares just for the purpose of getting the dividends. So that you can do for short term. It is not going to work always. Sometimes you may get it, yeah, you can enjoy the dividends, but it is not a good sign. You the whatever in the market, you have to think it in a long term manner. So dividends has to be very low. So now let us check here in the money control app. See, so in the money control app, you go here and yeah, say look here, Di- dividend. Here you have na 1.49. What is this? Only this much. EPS. Where is EPS? Earning per, yeah. Out of 51, look at this. Out of 50, see, TCS uh, has a EPS of, I told you, TCS has a EPS of 51. So what is EPS? Earning per share means, what is earning per share? Profit after tax by number of shares issued. Profit after tax means cut the profit into number of pieces. How much I can distribute to each shareholder? I can distribute 51 rupees to each shareholder, but I am not going to give all the 51 rupees to each shareholder. I am going to give only 1.49%. 1.49% of 51 rupees dividend yield. So 1.49% of 51 rupees. So that is how it happens. So if you go to some other company, you just say uh, Gas Authority of India Limited, GAIL, GAIL. You just see here, come down. You see EPS, yes, 25 rupees. TCS 51 rupees. Here very lesser, 25 rupees. Out of 25, you are going to give 3%. There 1%. Here it is 3.24%. So what you are going to do? So that is why public sector company, it is giving more dividend. So GA Gas Authority of India Limited is giving more dividend as compared to TCS. So obviously, even though more dividend means you'll get more money, but how many days? You are getting only dividends, but the stock is not growing. Na stock is there only. You invested 1 lakh, 1 lakh is same. It's lying there only. Only dividends are given only thrice a year, 4 times a year. Only at that time you will make money. Who is going to wait for the till that day? You don't want money. On the other day, you need. So it is not the right time to invest in such public sector companies which are giving high dividends. Either public sector or both private sector. So that is with respect to earnings per share. Any doubts are there, you kindly ask, stop me and ask. Another last concept I have, that is what is that? P by E ratio. Another ratio you have, that ratio you call it, that ratio I call it as P by E. What is P by E? P by E ratio. Just like P by B ratio, share price divided by book value, I have another ratio called as share price divided by EPS. EPS you already know now. What is EPS? You already know. So share P means share price. Share price divided by EPS, earning per share. So share price divided by earning per share. So this is a concept, and if you see, share price divided by earning per share should be less than industry P by E. So for example, if you take banking sector, you have HDFC Bank, you have Kotak Mahindra, you have ICICI. Okay. So if you see HDFC, Kotak Mahindra, the share price of Kotak Mahindra is higher than the share price of HDFC. Am I correct? So share price of Kotak Mahindra is higher than share price of HDFC. For example, let us see P by E ratio and what is industry P by E and what is P by E. We will discuss by taking an example here, just to make you people to understand. So let us go back to the money control app. So I'm going to money control app here. So here in money control app, I'll just type HDFC. So note down the share price, HDFC Bank. So HDFC Bank. So HDFC Bank is 1,371 rupees. The share price of HDFC is 1,371 rupees. Here it is coming like this, 1,371 share price. And the P by E, E means what? EPS. So EPS is 65. So 1,000. So whenever you sit for stock market classes, better to have a calculator. So better to sit with a simple calculator or scientific calculator, whatever you have. So share price is 1,371. EPS is 65. 1,371 divided by 65. So the P by E ratio of HDFC Bank, 1,371. So 1,371. So look at this somewhere here, 1,374 or 1, low and high. So in between this it will be there. 1,371 divided by 65. So how much I'm getting? I'm getting a P by E ratio of 16. So P by E ratio of 16 rupees for, you note it down. For HDFC, P by E is equal to 16. Similarly, so what I have to do? I have to go for Kotak Mahindra. So Kotak Mahindra, see, what is the share price? HDFC 1,300, Kotak Mahindra 1,700, more than. See, there is nothing to do with, see, just because Kotak Mahindra share price are higher, it doesn't mean that Kotak Mahindra is a good company than HDFC. No, already people know that HDFC is more successful than Kotak Mahindra, correct? So 1739 is the share price. What is the EPS? Earning per share here. So earning per share is 54. So earning per share is 54. So 1,739 divided by EPS, P by E, 1739 divided by 54. What is the value? 1739 divided by 54. 32. Kotak Mahindra P by E ratio 32. HDFC P by E ratio 16. So what the condition is, P by E ratio should be less than 20. So P by E ratio for Kotak Mahindra is 32. So P by E ratio for HDFC is 16. So if I ask you, so so for example, I have 1 lakh rupees. I want to invest in some banking stock. I will not invest in Kotak Mahindra because its P by E ratio is 32, but HDFC P by E ratio is 16. What is the one of the P by E ratio is very, very important. During COVID time, Buffett told, I am not going to invest any company. I am not finding any company whose P by E ratio is less than 20. So I am not going to invest. Instead, I am going to sit quiet. So always P by E ratio, market capitalization, promoter shareholding are very important. So P by B ratio, it's okay just for our understanding. More than P by B, P by E ratio is very important. P by E ratio should be less than 20. So HDFC P by E ratio is only 16, 16. It is less than 20. It is a good company to invest. It's a very good company to invest. So that is how you are going to say. So that is how you are going to look into. So P by E ratio, so for should be less than this. I have forgotten to write 20. So should be less than this one condition. And another condition is, so for HDFC, I got P by E ratio. P by E ratio, I got 16. Similarly, for Kotak Mahindra, I got P by E ratio 32. So look at this. So this is for HDFC Bank. So this is for Kotak, right? So out of this, HDFC is a good company to invest. So this is how, and similarly, P by E should be less than industry P by E. So here I'm not, so how you have to find out the industry P by E? Download the money control app. So here it is not available in money control app. So in money control app, you can check financials. So under that you will get industry P by ratio. In industry P divided by E ratio, you will get the industry P by E ratio. Always see, if you check it, the industry P by E ratio of bank is around 20-22. So Kotak Mahindra industry P by ratio is 32, greater than industry P by E. So not satisfied. So P by E ratio of HDFC is 16. That is less than the industry P by E. Anyhow, we cannot see here. You can see, if you download the money control app, you can check the industry P by E ratio. Not only in banking, in any sector, you are investing in metal, IT, or anywhere. So just check the P by E, or in the tires, check for JK tires, Apollo tires, whatever MRF. Check which is better to invest. Check the P by E ratio and industry P by E ratio. I think this is about the financial ratios. Any doubts are there? You just ask. Another, I think it will go off in another 2 minutes, in another 5 to 10 seconds. Any doubts are there? You ask, or else